There's a new gold rush happening right now, but it's not for gold and it's not on land. This gold rush is taking place 6,000 meters under the sea. It's pitch black and the pressure is so strong it could crush a military submarine in a second. And here's the crazy part: almost no company in the world has figured out how to do this profitably. It's one of the most expensive, high tech, and riskiest ventures on the planet. But India is betting billions of dollars to lead this race anyway. It's a major push to get the resources that will power the world for the next 100 years. Leading this project are two giant companies: Vedanta, a massive private company, and NMDC, a huge company owned by the government. So the question is, are they about to make a huge breakthrough, or are they walking into a trap worth billions? To understand that, you first need to know just how big India's plan really is. So, why is India suddenly so interested in the bottom of the ocean? The answer is the worldwide rush for critical minerals. Everything from electric car batteries and wind turbines to your phone and military weapons depends on metals like cobalt, nickel, and copper. Right now, the global supply of these minerals is shaky, often controlled by a single country, which puts India in a tough spot. But this is where India's ambition kicks in. To become more independent and power its Make in India and green energy plans, the government looked to the one place it has control over: the deep sea. This is the Deep Ocean Mission, a major project started in 2021 with a budget of over 4,000 crore rupees, about $483 million. dollars. And this isn't just a research project, it's a smart strategic move. Through deals with the International Seabed Authority (ISA), India has secured the rights to explore huge areas of the seabed. In the central Indian Ocean basin, it controls a 75,000 square kilometer area, bigger than the country of Ireland. This one spot on the ocean floor is thought to hold 380 million tons of what are called polymetallic nodules. Inside those nodules is a treasure trove: an estimated 4.7 million tons of nickel, 4.29 million tons of copper, and over half a million tons of cobalt, the exact metals needed for the future of energy. To get there, India has built the star of the mission, the Matsya 6000. You can think of it as India's spaceship for the sea. Made by the National Institute of Ocean Technology, this vehicle is a small titanium ball that can carry three aquanauts down to 6,000 meters. This proves India can build advanced technology on its own, joining an exclusive club of countries. But exploring is one thing, actually mining is a totally different challenge. For that, India built Varaha 3. This machine is the real workhorse. It's a remote controlled mining robot that looks like a tank from the future. It crawls along the ocean floor using a special collector to pick up polymetallic nodules while trying to minimize environmental harm. In recent tests, Varaha 3 worked successfully at depths of over 1,100 meters, collecting nodules packed with battery metals. This two-part plan, the manned Matsya 6000 to find the resources and the robotic Varaha 3 to collect them, is the foundation of India's strategy. But a government mission alone can't build an industry. How do you get major companies to risk billions on something so uncertain? You send them a formal invitation. If you wanted to pick a company tailor made for a risky but potentially revolutionary mining project, it would be Vedanta. As India's biggest mining and metals company, it already works with over 15 different materials, with a sharp focus on those needed for clean energy. And this is where the real opportunity lies. Vedanta is aggressively positioning itself at the center of India's critical mineral supply chain. The company recently won auctions for 10 land based mining areas, looking for everything from cobalt to rare earth elements. For them, the deep sea is the next logical move. A key rule change officially opened the door. In 2023, the Offshore Minerals Act was amended to allow private companies into deep sea mining, a sector once reserved for the government. It was essentially an invitation to companies exactly like Vedanta. But this is where things get risky. The financial and technological hurdles are enormous. Deep sea mining is arguably the most expensive mining ever attempted. We're talking a multi-billion dollar bet with no guarantee of a payoff. While Varaha 3 is a promising start, no company in the world has proven this can be done at a commercial scale profitably. Any failure at 6,000 meters deep would be a catastrophe. But there's one big problem nobody is talking about. The rules for this game don't exist yet. Negotiations at the International Seabed Authority have been stalled for years, and a group of now 40 countries is calling for a complete pause on deep sea mining due to unknown environmental damage. Spending billions on a venture that new rules could suddenly ban is a huge risk for investors. Finally, there's the reputational risk. Deep sea mining involves stripping untouched ecosystems. This could destroy habitats and release carbon stored for millennia. For a company like Vedanta, being linked to deep sea destruction could be toxic, especially as investors increasingly prioritize environmental responsibility. Just look at the failed deep sea project in Papua New Guinea, which cost the government over $100 million and led many global banks to refuse funding for the industry. Vedanta represents the private sector's big gamble, but what happens when the government itself pushes one of its own companies into the deep? That brings us to the other major player, the state owned giant NMDC. If Vedanta is the agile private player, NMDC is the stable government backed powerhouse. As India's largest producer of iron ore, NMDC is considered a crown jewel of the nation's industry. For NMDC, this isn't just a business opportunity, it's a national mandate. As a government owned company, its goals are tied to national strategy. If the government declares deep sea minerals a matter of national security, NMDC is the logical choice to execute the mission. But this isn't just about duty. The company is actively trying to branch out. It's been pursuing mineral resources abroad, like lithium, copper, and cobalt in Africa and Australia, the very minerals found in deep sea nodules. NMDC is also honing more precise mining skills, suggesting it's quietly building the expertise needed for such a complex operation. With deep pockets and the full backing of the Indian government, it can weather the long, uncertain timelines better than most. So, with government support and a massive balance sheet, what could go wrong? The biggest risk for NMDC is that this is just not what it does. The company is an expert in bulk mining on land. Shifting to high tech deep sea robotics is a monumental leap, requiring a completely different corporate DNA, and the long timelines are a huge issue. Any profit from deep sea mining is likely a decade away, if it ever arrives. Justifying that level of public spending on a project with such an uncertain payoff is a tough sell. But the external risks aren't just global. There's a major conflict brewing right in India's own waters. Some of the areas marked for mining are also the nation's most productive fishing zones. This has sparked serious political challenges, with the government of Kerala already passing a resolution against the plan, signaling a fight ahead. So we have two corporate giants, one driven by profit and the other by national duty, both staring down the same colossal risks. What does this mean for someone looking to invest? So, what does this all boil down to for an investor? First, this is not a short term play. It's a high risk, high reward saga that will unfold over a decade. The Indian government is clearly committed, driven by the strategic necessity of securing its own mineral supply. That powerful state backing is a major point in its favor. For Vedanta and NMDC, this is a potential game changer. It offers a path to securing vast reserves of the world's most in demand minerals. If India pulls this off, these two companies could become global leaders in the new energy economy. The upside is enormous. Here's the catch: the path is littered with traps. The technological, financial, and regulatory challenges are immense. The environmental debate will only intensify, and the lack of a global mining agreement creates a fundamental uncertainty that cannot be ignored. This brings the choice for an investor into stark focus. If you believe that technology will overcome the hurdles and that the sheer demand for minerals will eventually force nations to establish workable rules, then there is hidden value in these companies. But if you believe the environmental backlash is too great and the costs are too high, then this venture is likely to sink, taking billions in investor capital down with it. In the end, this isn't just about the money. It's a bet on whether India's national ambition can triumph over the brutal realities of science and global politics. India's journey to the bottom of the ocean is a clear signal of its intent to control its own economic destiny. The Deep Ocean Mission, with technologies like the Matsya 6000 and Varaha 3, represents a monumental national effort. For corporate giants like Vedanta and NMDC, it's a once in a generation opportunity to unlock immense wealth, but the path is fraught with unprecedented risks. This is a true high stakes gamble. The big question is, will the rewards be worth the huge risks? Is this underwater plan a brilliant move for India's economy or a disaster waiting to happen? Let me know what you think in the comments below. If you found this breakdown helpful and want more deep dives into the Indian economy and the companies shaping it, make sure to subscribe and hit that bell icon so you don't miss what's next.